Hi everyone, today let's talk about Boeing, then we'll take a look at the calendars, the charts, and my accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the Dubai Airshow happened and Boeing did very well. They sold 295 aircraft at the show, while Airbus only sold 86, showing their dominance in the sector. Boeing continues to be the leader in terms of commercial air. They also do other things, but this is focused on that sector of their business. You can see 90 of those orders were for the wide-body 777, which totaled $52 billion. And then they also got an order for $11 billion for 30 of their 787s. This is the first ever order here for Fly Dubai. So overall, Boeing doing really well. The main issue with Boeing here recently, obviously besides the 737 debacle that they had, really has been their ability to produce planes fast enough to keep up with demand. They have a massive backlog, and I do believe this company is going to do well in the future. They have to work through some of their short-term issues, but once they get through those, they can speed up their production of planes and really start to benefit from this massive demand that they have for their airliners, as they really are the best in sector here, and even with that, they only compete with Airbus. And lastly, for this, they mentioned here that these orders did exceed expectations. They clinched 356 orders at the Paris Air Show, where Airbus again only had 86 from their air show this year, which was massively below their air show of 2021, where they had 846 orders, and then 408 at the Dubai Air Show, so they seem to be losing ground relative to Boeing. Moving over to Amazon just for a moment, I wanted to highlight that Amazon is now going to allow auto dealers to deal cars on the site. Starting with Hyundai, this is pretty interesting. I guess it seems kind of weird to buy a car on Amazon, but there's lots of online retailers selling vehicles right now. And if they use that same methodology, I guess it's not that weird. It's just kind of odd to buy your batteries and your vehicle from the same website. But we'll see how that plays out here. This is Amazon moving into yet another sector, and I'm sure there will be some profitability on the Amazon side. And then they do highlight here companies like CarMax and Carvana already sell vehicles online, and we'll see how that plays out here for Amazon. Moving over to the economic calendar, you can see initial jobless claims a little bit higher than expectations, not great. Then we have Philly Fed manufacturing coming in better than expectations. Overall, not a ton of data. Fed balance sheet sold off about $40 billion, pretty substantial step down for them. And then looking at the Friday data, we have CPI for the Eurozone, could be interesting. And then building permits here at 8:30 for us. Overall, going to be a pretty quiet Friday in my opinion. Moving over to Max Payne, you can see it's still sitting in this 430 area. It's bumped up a few dollars, up to 433 from the beginning of the week. Total options still in that same zone, around 4.3 million. A finish around 440 makes sense. Top of the puts here at 453, that would also be an area where you could look for a finish. 455 does seem like a call wall. A little bit below 450 would make sense as well, where most of these puts are expiring worthless, but some of the calls are going to make money. It just seems like that's going to be the case. So we'll see how that plays out going into tomorrow's session. But 455, upside limit in my opinion. That still gives you quite a bit of room from the 450 current stock price, but realistically, I think the opportunity on Max Payne is to the downside. Moving over to the charts, starting off with the SPY, you can see we were basically flat, 0.12% to the upside. We did close technically above that trend line. We were above it yesterday, and you can see we're still holding above my support. Tested it here in the midday, ended up holding momentum ticking towards neutral. Did get a slight step down on the daily chart momentum. We are not quite overbought yet, but again, I just think the risk here is to the downside. We had multiple gaps on this colossal run. We do need to see some kind of pullback before we can see major upside. But like I said, we're not really seeing that reversal quite yet as this support continues to hold. If that breaks tomorrow, it would make sense to get back down into that 440 area, kind of like we talked about on Max Payne. Moving over to the NASDAQ, very similar thesis here. We had 3 days in a row basically right next to each other, not moving very much. Does look like an island reversal type setup at this point. I didn't mention that on the previous chart, but it does kind of look like that here. If we get a gap down tomorrow, that could be a pretty good indicator that we're going to be moving lower into the Friday session. So we gapped up, 3 days consolidation, gap down. That would give me a big indication to the downside, which makes sense, like I said, for Max Payne. Momentum on the hourly chart, basically zero. It is swinging towards bullish, but we got a slight step down here now after hours. Interesting. Tested my 384 level. Held that zone, rallied up, finishing right around 386. Now we're selling off again after hours. So momentum, step down. This has been choppy here now. And again, it does seem like it's going to roll over at some point. The question is that tomorrow or is it next week? Either way, it seems to me that the risk is to the downside more than the opportunity is to the upside. Moving over to the Russell and the Dow. The Russell showing a very different story here, down 1.62% on the day. And this is a classic reversal. Big candle up, big wick rejection, big candle down, clear confirmation to the downside. And typically when we see this, the Russell is giving us an indicator that we're probably going to see more downside across markets. That 55 EMA zone did hold, which is interesting, but momentum stepping down, volume not really confirming. But overall, this does not look good. Clear confirmation to the downside, just below my level, 175. 96 is the level, and we're at 88. So we're below it technically, still watching that 55 EMA, but realistically 172.60 makes the most sense for me here. Dow, more similar to the SPY and the NASDAQ. Sideways candle, down 0.07%. Still above trend, did test that trend here today and then rally off of it, but stuck between trend and 150.92, right at this high from 14 September. Again, if we gap through that level tomorrow, I would expect that this is going to pull back fairly substantially. Moving over to the equal weighted S&Ps, also down about 1/3%, coming off of that 200 SMA. The 144 and the 200 are basically on top of each other now, within a couple of cents of each other. We're below the trend line, we're below support. Next support is 142.50, and I do think we're going to see a move into that zone tomorrow. Moving over to Apple and Tesla. Apple gapped up 0.9% to the upside, could not get above that 189.96 level. We did get the touch, which is what we thought was going to happen, over through this pivot point here from 1 September. The question is, what do we see now? This could be an island reversal setup, gap up, doji, gap down. That would be interesting for tomorrow's session. Tesla, on the other hand, continues to cratered throughout the day, started in the pre-market, fell throughout the session, falling after hours. Not what you would want to see there. There was some news surrounding Elon Musk and some comments. I don't know if that's what's driving markets here on Tesla, but we also touched that 200 SMA on the 4-hour chart. Honestly, I thought we would test it and hold, but we kind of overthrew it and then broke back below it. 21 EMA, 228.45 could hold, but we are below my 232 level. Next one could be this 223 area at these previous peaks, and then my support at 214 makes sense as a support level as well. 55 EMA sitting between those at 218.72. Taking a quick look at Boeing, you can see it had a long consolidation from January all the way to July of this year. Broke out, tested that high, quickly rejected, and then broke below this previous consolidation. Not great. Then we had a quick bottoming here at 177.55. You can see there was divergence on that move. You can see lower RSI reads into this first bottom. And then we had lower prices with higher strength. Then we ended up rallying from that level all the way up into this 210 area. And then right here, it actually looks very similar to what we're seeing across markets. Gap, gap, gap. Wick rejection, bearish candle, momentum stepping down, RSI overbought, selling off. And based on that, you would expect to move down to that 21 EMA sitting at 190.56. Moving over to NVIDIA and Meta, we talked about these yesterday. I wanted to highlight we did get a bullish candle, but not nearly bullish enough to overcome both of the bearish candles on Wednesday. You can see both of those rejection candles. Meta looking a little bit better, honestly, getting above my level at 333. You could trade off that level, but overall, I still think both of these are weak. Tried to recoup those losses, couldn't quite do it. NVIDIA still trading below 497.54, And you can see momentum on both of these daily charts stepping back towards bearish. And if we do see a confirmation candle tomorrow to the downside closing below the body of today's candle, that would be a pretty good indicator that we're going to see a fairly significant pullback, potentially down to this highly traded zone around 456. Moving over to staples and discretionaries. Staples pulled back here today. We talked about the gap up, consolidation, potential for a pullback. The fact that it didn't move yesterday was not a great indicator. Couldn't go any higher, couldn't get to that 70-85 level. Now we pulled back to the 21 EMA. If this uptrend is going to hold, it really needs to bounce here. And you do have to recognize this structure is still intact. We're making higher highs and higher lows. We've been doing that for a couple of weeks now, and I don't expect that to change quite yet. This could be just a shorter term pullback. Looking for that next rally up, certainly possible. But momentum is bearish, and you do have to acknowledge that. Discretionaries, similar move, fell throughout the session, took out that 166.78 level. 21 EMA sitting down at 164.06. That could be interesting. Again, momentum slightly bearish. RSI crossing below the SMA. Not great indicators to the bull side, but it could be something very similar to this where we rallied up, pulled back, tested support, rallied up, made a higher high. Still technically a short-term uptrend here on discretionaries. And if we just test this 21 and it holds, we could look for a push up to 170.68. Moving over to utilities and oil and gas. Utilities had a slightly bullish day, 0.53%, still holding above these previous highs, just barely. Overall, this structure still looks okay as long as this trend line continues to hold. We've had several tests of it at this point. It is a little bit concerning we haven't taken out the high from this gap up day on 3 November. Realistically, if we can get above that, then we're looking at a push up to 64.20. I do think utilities have shown some strength here, which is interesting, especially relative to what we're seeing on oil and gas. Moving over to oil and gas, we talked about this wick rejection here yesterday. Could not get above that 140.88 level on a closing basis for the day, which was not a great indicator. And sure enough, we gapped down and fell throughout the session. Did find a little bit of support after testing the 200 SMA. Talked about how we didn't test that on this previous move lower, which generally means we're going to come back and test it at some point. Also hit my level here at 135.07. If this level holds, that could be an interesting level to trade off of. Have a clear double bottom at that level. But again, this structure is pretty weak. You do have to pay attention to that. Even if we get a slight rally like we did here, that is a clear lower high, and then we broke down from there. And if we break this level tomorrow, there is quite a bit of room to the downside. Next level for me would be 128. Moving over to the 50 and the 200-day average. Again, very similar to some of the theses we've been seeing here. Both of these threw a wick yesterday. Both of them rejected. And now we got a confirmation candle down. Again, not what you would want to see if you're looking for more bullishness. Momentum on the 50-day average stepping down. We are clearly overbought on RSI. Everything looks like this is going to pull back at least a little bit. 200-day average, similar thesis. Wick rejection from that 200 SMA. Bearish candle confirmation lower. Just barely filled the gap on the wick, but realistically I would expect this to pull back down to that 9 EMA, which is currently trading around 43, just behind my level of 43.55. Moving over to oil. I don't usually talk about oil, but I've been thinking about adding it in here, so let's take a look at it. In terms of recent history, we were very, very high going back to June of 22. Very consistent downtrend down to that 66.50 level. Held that level, rallied up a little bit up to $93, and then $93 was a clear level of resistance, clear pivot point. And you can see that high was marked from 7 October as well as 7 November of last year. So definitely a point where there was going to be some sellers. And right now we're in this downtrend. We are at an area of support. $73 does make sense. Doesn't mean we can't break down to 65.50. That is also a very clear area where we have found support multiple times. But this is an area that makes sense as well. It's right here at the top of this consolidation. And it might be worth watching in this zone. Still very much a downtrend. Want to see some consolidation at this level if it's going to do it. But it is interesting here. Moving over to the 2-year and the 10-year, both of these sold off here today. 1.5% on the 2-year and 2.12% on the 10-year. People are assuming that there's going to be cuts pretty early next year. I still think we'll probably make it at least through the first 6 months of next year before we see any cuts. But even being done with hikes is indicating that yields are probably going to be moving lower on the back of that information, especially with the inflation data that we got this week. Next level for me on the 10-year, 435. 2-year, looks like I need to add some levels, but watching this 144 EMA sitting at 473. Moving over to the dollar on the hourly and the daily, basically nothing on the day. You can see actually 0% movement on the day. That's interesting. You don't see that super often. So completely flat on the dollar, still at resistance 104.41. Makes sense that we could continue to sell off, hit that 200 SMA. Again, similar to oil and gas, got into the zone, did not test that 200, and I would expect at least a test there. 103.64 is my level, just above that 200, and a pullback into that zone makes sense to me. Bearish momentum on the daily chart, not oversold quite yet, and hourly momentum doing not much of anything. Moving over to JNK and TLT. JNK had an inside candle compared to yesterday. Again, sideways price action, could be an island reversal, gap up, sideways action, gap down. That would be interesting, momentum fading. TLT on the other hand, had a gap up, right into the same zone. This has been choppy, but continues to make slightly higher highs. So you have a high, higher high, gap down. If you consider this a low, then you would expect a higher high off of that bounce. See how this continues to play out. Momentum fading similar to JNK, but not overbought by any means. And this has been a colossal sell-off, so there's plenty of room to the upside in my opinion. Definitely something to watch here on TLT, more as an investment and a little bit less as a trading vehicle. Moving over to the MOVE Index and the VIX. MOVE Index sold off a lot, makes sense. Bonds were rallying, yields were falling. VIX, on the other hand, continues to hold in the zone. Momentum continues to tick towards bullish. If this crosses above the SMA, that could be interesting. And we actually got a slightly bullish day, 1.13% on the VIX. Makes sense that it would push back up to that 1490 level. Still have trend resistance just above that, around 15.26, but overall I am still expecting this to bounce at least up into this 17 area. Moving over to my accounts, I got squeezed on that IWM move, as you would expect. I think I'm going to take a pause on the IWM. It has really been moving a lot, which is not very helpful when it comes to my style of trading. You can see that's really played out here. This account was up about $1,000 on the year. Now it's down about 600, which isn't a lot, but it is kind of frustrating. Really should be doing better on those positions. And then you have the Qs here, continues to make money as it moves sideways on these calls, which was able to offset that loss. I did make a few dollars on the day, which is okay, but really it should have been better. Overall, going into tomorrow's session, still expecting downward movement, have lots of protection on these calls, waiting for some of that money to come in over the next couple of days. I didn't make any changes besides taking off that IWM position. I'm pretty well protected to the downside. You can see my first strike here is down at 379, and I have $7.69 credit on that position, plus an open loss of $100. So technically I have $8.69 on that credit right now. And even if we were to fall about 2% more, I would still have plenty of room in terms of protection over the next week. Let me know down in the comment section what you think of Boeing. Can they get their act together and be a profitable company again? And would they be a good investment? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.